Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson. This is Spotting the Trade. I'm going to get you what you need to know before you roll, and that's going to start out with some economic data, see how that impacts the overall markets with some market analysis, maybe sprinkling in a little geopolitical fodder around that all out, and then talk about some strategies we could implement into our portfolios and maybe go through a couple of my daily regimens, if you will. So please stick around for that. But before you go, smash that like button too for me. That helps out. It feeds these bots to run out there and find somebody like you. All right. So without further ado, economic data. Something that we missed out on yesterday was the unemployment claims here in the United States coming in right in line with expectations at 180,000. So really nothing to see there. Advanced GDP, though, did creep up a little bit to 8% from expected to be, 7.2%, I believe. And the advanced GDP quarter over quarter coming in lower than expected, which was really surprising at negative 1.4%, expected to be 1.1%. So as we talk about GDP, folks, that this is the annualized change in inflation, and it's adjusted for all of the goods and services that are produced in the United States. So really surprising to see that number coming off as much as it, to really get the devil of the details there as to why that's really pulling off. Something else that we noted here, that we were going to be getting consumer price index across the pond and some GDP numbers today. French preliminary GDP came in a little bit higher than expected at 0.4%, expected to be 0.2%. We also saw Spanish flash GDP coming in a little bit lower. So we're getting a real mixed signal here on some of these GDP numbers, who's doing well and who's not. So not getting a clear picture as to what's going on here. If you're not getting anything consistent, it's just really kind of some people are doing well, some people are not. And then we get the broader consumer price index number for the rest of the European region coming in just a little bit hotter than expected at 3.5%. Now that's a little bit hotter than expected, but that's still a pretty hot number. So seeing those really start to jack up. Now, personal consumption expenditures here in the United States, this is something we're going to keep an eye on really closely going forward, because this is going to tell us how the consumer is doing in the economy. So when we get personal consumption expenditures in line with expectations, that's not giving us a whole lot. But we saw the personal income ratchet up a little bit. We've seen this coming down the pipe. This is starting to show up in the economic data points that ratcheted up. Personal spending, though, superseded that. So really starting to see some folks get out there and spend. 1.1%, expected to be 0.7%. So although their incomes are increasing, they're spending more based on that income, and personal savings is cratering, really. Something we're going to keep an eye out for is Chicago's Purchasing Managers Index a little bit later on. You know, I love those numbers because they're forward looking there. All right, so let's get on with sharing the screen, and we'll talk about the markets here. All right, we've got crude oil here starting to creep up a little bit here. Not really surprising with what we're seeing. Manufacturing doing well. We're seeing the consumer spending. So that means that they're loosening their purse strings, if you will, and letting that money go. Now, bonds, I talked about this. Anytime you see a bounce in these bonds, I would take advantage of looking at covered calls to try and cover your portfolio, your bond portfolio there. We talk about different ways to do that in the webinars. But one of the things here is we've been talking about finding these candles for the past 6 months, right? In the webinars, daily market commentaries, I'm talking about setups that we're going to be looking for trend reversals and things of that nature. Well, it looks like we're trying to get one yesterday on this trend reversal, but it's not going to happen. I think it's going to continue to roll over. It would have been the time last couple of days to be looking at those covered calls, because we have that super high volatility. You intuitively know that the pricing in the options is expensive. All right. And if it's expensive, we want to be selling. So selling strategies. So that's why we did the webinar yesterday on the short call spread. Week before, we did it on the short call. We've got this incredibly high volatility. We should be taking advantage of that. So with that said, I don't think you've lost your opportunity here in the bonds, but I would say that I would get involved if you haven't already. Bitcoin, nothing to see here. No real follow through with Bitcoin lately. gold starting to make some moves higher, despite the fact that we're seeing the dollar continue to strengthen a little bit here. I think that we're going to continue to see gold teeter back and forth above this 1923 number. That's the previous all-time high. I think that that's a real psychological level that folks are going to always remember, and looking to make that incremental move higher back into 2000s. I think that we probably could see that, especially if we continue to see inflation rear its ugly head. Now, VIX continuing to remain high here, despite the fact that the last couple of days in the equities, we've seen some gains here. Now, I've talked about this with this sell-off, that I think there's a couple of points of contention that we're going to have to deal with before we see any type of reversal in the markets here. And the line in the sand here is 12,500. I've talked about, I don't know where that came from. Talked about this number here. All right. That's that previous high. I think it's going to have to be revisited here as we're continuing to march down. So I think we're going to see another leg lower. How much further are we going to go? I don't think it's that much further. I don't think everybody is really that concerned. It's really just kind of a show of face on this 50 basis point incremental move that folks are getting a little bit nervous about. So I do think that we do have another leg down before we can start any type of upward trades here in the markets. We can see that the Dow Jones Industrial Average, very similar in nature. I talked about this yesterday. Remember, we're going to possibly see a nice little relief rally on Wednesday and Thursday of this week. We got that. But one thing that has been the real question mark in the markets right now is on Fridays. What is your thought if you're a trader going into Fridays, especially around this type of global tensions that we've got going on? Not real keen on holding a position that you have no ability to hedge over the weekend if something crazy goes off. And I'll tell you that hedge fund managers are thinking the same thing as you are. They aren't looking for opportunities to buy on Fridays. They're looking for opportunities to sell. So I think that we're going to see on Fridays some weakness as folks are going to be, covering some of those more risky parts of their portfolio, maybe just their tradings even. That will cause that negative pressure going into the weekend. Not looking forward to something good happening is not going to be something that hangs in the market very well. Now, I've been wrong a couple of times the last couple of weeks where we've actually seen a little bit of strength in the week into the weekend, which is a little bit bizarre to me. I would not be holding anything, so I wouldn't expect anybody else to want to hold a whole lot of equities over the weekend. So that said, I would expect to see some weakness heading into the later parts of the day today. E-mini S&Ps are all setting up that way. Yeah, we've had some strength overnight. Yeah, it's actually, I could pretty much say that the overnight inventory is relatively flat, maybe slightly negative, if you will. But I would expect to see maybe a little bit of a bounce as we're seeing this personal spending going. A lot of the manufacturing numbers looking pretty decent. So that said, there could be a little bit of a buying frenzy off the start as folks think that they can jump in on it. But I think they're going to be buying into some relatively heavy selling pressures there. So I would expect us to look to move to the downside. All right. Well, with that said, let's get on with the just go through some markets here. Usually what I do in the mornings before the market opens, give myself a little bit of a review as to what's been happening here, and usually slide up to the very top, get the ones that have the most volatility, see what's going on. It also usually encompasses things that are going to be having earnings, so it keeps me in touch with that. Twilio, something to note with this. This is those dojis I talked about yesterday. Remember when I actually drew these up side by side? To me, this, even though it's at the bottom of a move, like we're seeing 52-week lows being printed here, but these two dojis, when they start stacking up like that next to each other, that is something that I'm not going to jump on ever. Could you please upload the video strategy of option selling and hedging techniques? I have a bunch of videos out there. If you can't find it, let me know, but it'll talk about cover calls and things like that, how we sell puts to try and add value to our portfolio, whether it's through just an extra little dividend for that stock by selling that put, we get to collect credit, and that would be something that we would be very keen on adding to our portfolio. But what I want to talk about with this two dojis backing up together, I would not jump on this even as an aggressive trader trying to find dojis like this at the bottom of a move to take advantage of. Yeah, this is one right here that would have probably got me keyed in on because it's got a bottoming pattern and a confirmation. Broke it though the next day. We're getting this continuing pattern. I think that Twilio is going to continue to the downside here. I actually wanted that back. Let me just do this and link these so that I can just flip through the charts real quick. All right, TBT, folks, this is a triple leverage ETF. Stay away from that. It is a short there. All right, we were looking at Deere and Caterpillar yesterday on looking for a couple of bottoming patterns. It didn't really happen. It's really messy. It's at this point of control. Something to note there. When we're at a point of control like this, folks, this is going to be something that is going to be a magnet. As folks have traded around this area, there's just not a whole lot more interest to trade back and forth. So it'll kind of flutter here in and around these markets. So I would not be jumping on anything right now, folks, on setup candles, thinking there's going to be a big reversal. Wait for the confirmation right now. We're not really seeing any of those show up in the markets. We're getting a lot of these type of patterns, but still, again, wait for the confirmation across the board. This even looks like we could be getting a nice little support area, but again, until we start seeing incremental moves higher, I'm going to probably sit on my hands here. All right. I talked about a couple of opportunities to add to your portfolio in the webinar yesterday. Those are FCX Freeport McMoran. I think that is a short covered call type of strategy. I was looking at Lululemon just because of my long-term outlook on Lulu. I think it's going to struggle here as folks are getting away from yoga and getting into sweatpants. So we'll see if we can take advantage of some downside in a few of those as well. All right. So have a great weekend. Hope this helps you out in your trading day. And if you can't beat that, take it easy.